let's talk about time and price. Time and price. Time and price. This was introduced to me as an ICT concept. Let me first by saying, I'm gonna bait all you guys. I'm really an ICT skeptic. Some of his ideas I like. I've studied them. Some of ideas I'm not sure on. I'm okay with picking and choosing. The idea that every single move is controlled by an algorithm just doesn't make any sense in the world to me. And it's unlikely that he's even a profitable trader. But that doesn't really matter. Those things don't really matter to me. What mattered to me is that some of his ideas are really good, and I've seen some people apply his ideas and absolutely kill it at trading. So let's get into it. First, we have what is the concept of time and price? Well, he's basically saying that time is more important than price, actually, in terms of determining what sort of move's going to happen and when it's going to happen. And my take of that is not just time in the day or day in the week, but also week in the month and especially month in the year. And if you investigate these things, you can find some statistically significant proof that these things really matter. So it's important to me not just to have an idea, but to have some kind of proof. So let's talk about how to take advantage of some of these things. By the way, if you don't know me, welcome in, much love fam, Trav here. I'm a trader and this is what I do. So the first and most obvious concept of time and price is New York Open. If you pull up almost any asset and you look for where the most volatile move was, and also if you have volume on in your chart and you look for where the most volume occurred, it's usually that first hour of New York Open. In Hawaii time, this time right now it's 3 a.m. Okay? So what does that mean? It means that you have to be aware of what time it is when you're putting on a trade, right? So what sort of moves happen at New York Open? Well, there's two things that I commonly see when I look back in the chart. I don't think I've ever in my life traded New York Open because I've lived in Hawaii the whole time I've traded and I don't get up at 3 a.m. to trade. But oftentimes there's just a one directional move. Price just moves. This is when it breaks out and holds a breakout. This is when it breaks down and holds a breakdown. Or oftentimes we see what I call a swing failure. ICT might call it a turtle soup, but a fake out and then a strong move, where you sweep liquidity and then reverse the other direction in a strong move. And there are also times I look at the chart and I like to check what happened at New York Open, and nothing happened at New York Open. Nothing really happened. Sometimes there's low volatility days. But if you look for the largest move on the charts, yes, they occur. So what does that tell us about time and price? Well, one thing is, if you're going to trade an asset that moves at New York Open, you don't want to be in a tight stop loss going into New York Open, right? Because you don't want to get stopped out on the swing failure, the fake move, right? Time and price. It could be, though, depending on your schedule, hey, maybe you want to trade something, you're not awake at New York Open, you want to trade Asia session, you want to trade Asian currencies or something like that. So time of day is important. You can trade outside of New York. I do. And one of the things that I know from trading outside of New York is most of the time there's not going to be a meaningful move, or there's not going to be a major breakout. I can expect reversals most of the time. Sometimes there's a breakout that'll occur at New York close. But outside of that, in the dead hours, I'm expecting price to mean revert. I'm not expecting high volume. I'm not expecting breakouts. And what that means is I don't want to buy a breakout. I don't want to buy a breakdown. I want to sell a breakout. I want to sell a breakdown. Or I need to be prepared to hold overnight through New York with wide stops, right? So that is on the daily of time and price, right? Now there's also the weekends, a day of the week, right? I trade crypto, I trade the weekends sometimes. And one of the things is, I expect nothing to happen on the weekends, or weekends are even more dead hours, where whatever happens on the weekend, it's going to revert. And there's some evidence of that, of the CME gaps getting filled. If price pumps in the weekend, it's more likely to revert by the time the market opens, or dumps in the weekend, it's more likely to pump, right? So if I'm trading New York, I might be more looking for breakouts. But if I'm trading the weekend on crypto, I'm looking for failed breakouts, right? Why would there be the volume for a trending price breakout on a higher time frame on a Saturday morning? So before going in a trade, I'm always thinking, what time of day is it and what day of the week is it? And there can be more to it. You can get more advanced. I know ICT gets into concepts of this day tends to be the low of the week. This day tends to be the high of the week. I haven't found a lot of evidence for that. I'm not saying that it's not true. I just prefer to base my I need conviction. I need to be around things that I've studied and observed to be true. And what's relevant for me is trading the dead hours and knowing what to expect during the dead hours. So that's the first thing, is time of day and day of week. I'm not going to go so much into week of the month. I haven't noticed that much, but there is statistically significant evidence of seasonality across assets, which is month of year. So there's also differences on election years, but I haven't studied that quite as much. But let's talk about how assets move on particular months. So the markets tend to have the strongest trends and the most upside between October and April, October, November, December, January, February, March, April. The worst months tend to be after those, especially the summer months, June, August, September. And there's statistically significant evidence. Not only do those months historically have more downside, but they historically have lower volume as well. Fewer shares are traded. Why is that? Well, kids are out of school, parents travel with their kids, traders take the summers off and they travel. They have the money, a lot of them are successful, and they just have their bots trading, and they come back after Labor Day in September and they start trading again. Also, part of seasonality is a lot of the time, the couple weeks around Christmas and New Year's are pretty slow, but right after New Year's, January 2nd, the markets start to rock as people come in. So also paying attention to what month are we in. It's like, okay, we're coming into January. I'm expecting the possibility of a bullish month. Okay? We're coming into February. I'm expecting the possibility of a bullish month. They say sell in May and go away. Oftentimes tends to be true. We're coming into May, June, July, August. I'm looking for chop and downside. Maybe I should do something else with my life. Until the markets are easier to trade again, right? A lot of traders, knowing this, take the summers off. Because it's not as simple as saying, okay, now I'm just going to short in the summer. Well, it's just choppy in the summer and low volume in the summer. There aren't strong moves. So, to summarize, I've observed, and there's evidence that I wouldn't say necessarily time is more important than price, but it's important. Time is important. Time is definitely important. Time of day, day of week, and month of year. And possibly the year. I mean, we also see seasonality of Bitcoin halving years, for instance, and election years. So it's important to pay attention to these things and not just say, hey, I see a trade, I'm going to put it on, but to have an expectation of, if I'm putting on a trade in the dead hours after New York close, my expectation should be different than if I put it on at New York open, right? And maybe my stop loss and my TP should be different. On a similar level, maybe when I'm putting on a trade or thinking about a trading campaign where like I'm going to be trading on I'm trying to trade on the long side this month looking for a move. Okay, well, was it August or is it November? Because you may have a better chance with November than with August, and maybe you should trade a lighter. So those are a lot of things to keep in mind, but comment down below your favorite way to use time, seasonality, time of day, and so on. I do think it matters. So, well, there's evidence it matters. Appreciate y'all. Look forward to hearing what you have to say. Peace.